If you own a home in Florida, are trying to buy one, or are trying to sell one, the numbers that just came out should change how you think about your next move. The U.S. Census Bureau released new migration data showing that domestic migration into Florida has collapsed 93% in just 3 years. In 2022, over 310,000 Americans moved to Florida. In 2025, just 22,000. Alabama is now attracting more domestic migrants than Florida, and that collapse is dragging home prices down hard. There are zip codes on the Gulf Coast right now: Cape Coral, Punta Gorda, Sarasota, where homes are down 20 to 30% from peak. One condo in St. Petersburg, valued at over $1 million in 2022, is now listed at $249,000. But the price drops you're seeing today may not be the end. They may be the beginning. Three forces are converging right now that almost guarantee this gets worse. Florida's insurance crisis has crossed a line where it's making entire buildings unsellable. America's two largest home builders just revealed they're discounting new homes $40,000 to $60,000 in Florida as we speak. And the biggest Wall Street landlords in the country are quietly dumping Florida homes at a pace not seen in years. When that added inventory hits a market already under pressure, the math gets very bad for sellers. The Census Bureau's latest data, released March 26, shows the outflows county by county. Miami-Dade lost nearly 30,000 people to domestic migration last year. Broward lost over 20,000. Orlando's Orange County lost 15,600. Tampa's Hillsborough County lost nearly 12,000. Palm Beach lost over 9,200. Pinellas County lost nearly 12,000 total residents, the second highest of any county in the entire country, trailing only Los Angeles. Some will point to international migration as an offset. It used to be, but that lifeline is being cut too. Florida's net international migration dropped from over 411,000 in 2024 to 178,000 in 2025, a 57% decline in 1 year. The Census Bureau projects national net international migration could fall to just 321,000 by mid-2026. At Florida's typical 14% share, that's roughly 45,000 people. Nowhere near enough to sustain what's been built here. Florida's entire economic model runs on growth. Hundreds of thousands of people moving in each year to sustain demand for homes, apartments, and commercial space. When that migration collapses, everything downstream breaks. Home sales drop, inventory piles up, builders can't sell, landlords can't fill units, and prices fall. There's also one more factor nobody's discussing. 1 in 3 Florida construction workers is foreign-born. With immigration enforcement ramping up, the workforce that builds these homes is shrinking at exactly the same time demand for them is disappearing. Zillow puts the average Florida home at $372,755 as of February 2026, down 4.6% year over year. For context, the National Home Price Index is up 2.2%. The rest of the country is rising. Florida is falling, one of only a handful of states in negative territory. The Case-Shiller Index shows Tampa has posted over 14 consecutive months of annual price declines, the longest and steepest streak of any city in their entire 20 metro composite. Tampa is officially the worst performing major housing market in America. But Tampa isn't even the worst in Florida. Punta Gorda is down nearly 12% year over year. Cape Coral and Fort Myers are down over 9%. Sarasota and Bradenton are down 7.5%. Naples is down nearly 6%. Realtor.com is projecting Cape Coral will fall another 10% to the end of this year, the only metro in America with a double-digit decline forecast. In real dollars, if you bought a home in Cape Coral at the peak for $436,000, which many people did, as prices rose 75% during the pandemic, that home is now worth roughly $379,000. You lost $57,000. In Northport, prices sit 20% below August 2022 levels. The statewide condo market is down nearly 10% in 12 months and 13% from the cycle peak, the steepest annual condo decline since 2009. For sellers, the conditions are brutal. 77% of Florida homes now sell below asking price. Only 8.6% sell above. Median time to go under contract has stretched to 58 days statewide, and in Sarasota, it's 95 days. Florida posted the highest foreclosure rate of any state in 2025, with 12 consecutive months of year-over-year increases. Charlotte County, Punta Gorda, has seen a 400% increase in foreclosure filings since early 2024, and now has the highest foreclosure risk of any county in America. In Cape Coral, 27% of recent buyers owe more than their home is worth. Florida homeowners lost an average of $37,400 in equity last year, the biggest drop of any state. America's two largest home builders just reported earnings, and what they revealed about Florida is striking. Lennar, headquartered in Miami, reported Q4 2025 net earnings collapsed 55% year over year. Gross margin on home sales dropped to 17%, down from 22% a year earlier. They guided their average selling price down 8 to 10% from last year. Their executive chairman said the overall market remained challenged even as rates moved slightly lower. D.R. Horton, the largest home builder in America, saw net income drop 30%. They're sitting on 20,000 unsold homes. Their chairman acknowledged that affordability constraints and cautious consumer sentiment continue to impact demand, and said incentives will remain elevated through all of 2026. And incentives are staggering. Lennar is offering 5 one-arms at 3.75% in Central Florida, plus $30,000 to $40,000 off in some communities. D.R. Horton is advertising 0.99% introductory rates. LGI Homes is slashing $50,000 off move-in ready Orlando homes. Beazer is running $50,000 spend your way promotions. 2/3 of all builders nationally are now doing rate buydowns, creating an effective new construction mortgage rate of about 5.27%, while existing home sellers are stuck above 6%. If you're trying to sell your home in Florida right now, you're not just competing against the house down the street. You're competing against billion-dollar companies willing to lose margin and subsidize mortgage rates just to keep moving inventory. In Lee County, Cape Coral, building permits plunged nearly 28% in December alone. The builders see what's coming. They're not building into strength. They're liquidating into weakness. Florida homeowners insurance averages between $7,100 and $8,300 a year. The national average is $2,500, meaning Floridians pay 181% more than the rest of the country. Premiums have risen nearly 70% in 5 years. There is some stabilization happening. Citizens Property Insurance has shrunk from 1.4 million policies at its peak to about 395,000 today. 17 new insurers have entered the market, and Citizens just approved its first rate decrease since 2015. But in the condo market, the damage is structural. After the Surfside collapse, Florida passed a law requiring structural inspections and reserve studies for buildings 3 stories and above. As of January 1st, 2026, associations can no longer waive or reduce reserves for structural components. The results have been devastating. 40% of Florida condo owners have faced special assessments in the last 3 years. One building in North Miami assessed owners up to $134,000 per unit. A building in Aventura hit owners for up to $400,000 per unit. Monthly HOA fees in Miami high-rises jumped nearly $500 a month in 2025, with some buildings now charging over $2,000 a month total. Here's what makes certain condos literally unsellable. Over 5,000 properties now sit on Fannie Mae's mortgage blacklist because they haven't met reserve requirements. That means no conventional financing, cash buyers only. Think about what that does to your buyer pool overnight. Condo inventory statewide has swelled to over 13 months of supply. Listings surged 37% in a single year. 43% of condo sellers have cut their asking price. Half of the top 10 U.S. metros with the most unsold condo inventory are in Florida. If you own a condo in a building that hasn't completed its structural reserves, you're sitting on a rapidly depreciating asset with a shrinking pool of potential buyers. This may be the most telling signal of all. Redfin's Q4 2025 investor report shows investor home purchases in Orlando dropped 16% year over year, the biggest decline of any U.S. metro. Fort Lauderdale fell 15%. Jacksonville dropped 7%. Nationally, 9.2% of homes sold by investors in December sold at a loss, up from 7.1% a year earlier. These are sophisticated operators with data teams and analysts, and they're taking losses to get out. The largest institutional landlords in the country, Invitation Homes, Progress Residential, American Homes for Rent, First Key Homes, have been net sellers for at least 6 consecutive quarters. Not 6 months, 6 quarters. They've been selling more homes than they buy for a year and a half straight. First Key is the most aggressive, with over 1,000 active listings, cutting prices an average of 10% off original ask and reducing every 20 days. Miami and Tampa rank among the top markets for these institutional sell-offs, with some operators selling 4 homes for every one they buy. Invitation Homes owns about 24,000 homes in Florida, 32% of their total revenue, and reported Florida's same-store operating income declined in Q4 while new lease rates fell 4.1%. American Homes for Rent said new lease growth turned negative in January. The co-founder of Parcel Lab summarized it simply: rents aren't holding up relative to what investors can get if they sell. So the better risk-adjusted move is to take the cash and walk away. When institutional players dump thousands of homes onto a market that already has record inventory, builders slashing prices $50,000 to $60,000, and condos sitting unsold for 13 months, it creates a compounding effect. Every new listing puts downward pressure on those already sitting. Sellers undercut each other. Appraisals come in lower. Buyers see the trend and wait. The whole thing feeds on itself. Florida's housing correction is no longer a prediction. It's in the migration data, the builder earnings, and the foreclosure filings. The 3 forces outlined here: insurance making condos unsellable, builders slashing prices to survive, and Wall Street landlords heading for the exits, are going to keep pushing prices lower through 2026.